We up and I'm feeling like a new me. Stacking new sets, some new E. NFTs, all of them you need. Back in my zone like 2-3. All time high, hit a new peak. Let's go. Homie, the Bulls is back. I said the Bulls is back.
GM and welcome back to the channel. In this one, going through the investment thesis here on Hxro Network. So when we think back to 2020 or maybe even 2021, DeFi blue chips in the 1.0 era on Ethereum were born. Fast forward to 2023, going into 2024, and now we have these same opportunities but on Solana. A lot is possible on Solana that is not possible on ETH. There's going to be huge throughput with Firedancer upgrade coming next year. And I think we're going to see the home of DeFi here on Sol. So in this one, looking at Hxro, it's essentially a liquidity layer for Solana, for derivatives, for perps. I'm sure you've heard of people going long or short and getting wrecked on leverage. Well, this could be the home for that on Sol. And not only that, these guys are also building out betting applications as well. So we want to find these blue chips before they become blue chips and have that hefty price tag with them. And so let's run through the major talking points here. And if you stick around till the end of this one, we have a prediction model for not only price, but also passive income for stakers. So on screen here, we have the crypto derivatives markets. We know in traditional finance, the derivative market is ridiculously big. And I expect over time, this measly market cap of 3.2 billion in crypto goes absolutely parabolic through the roof. We're starting to see some early movement from the top gainers here like DYDX, etc. this week. But if we just run down the rankings a little bit, 1, 2, 3, 4, 5, 6, 7, 8 down here, we have Hxro Network. Market cap just $97 million. Compare that to the big boys up here, pushing towards 1 billion. A lot of room for growth. So why do I think there's going to be growth in this sector? We're seeing improvements in terms of UI and UX across the crypto markets right now, and we're able to get a very similar feel in terms of derivatives trading as to that of using a centralized exchange. We know that centralized exchanges also have risk attached to them, cough, cough, FTX, and furthermore, we're seeing regulatory risk as well. Myself in the UK, I'm unable to use derivatives products on centralized exchanges, and they seem to be clamping down more and more on what I'm allowed to do in my geolocation. So as this trend continues, we're going to see more and more on-chain derivatives. And with a perfect user experience potential on Solana, I think we have to look towards the derivatives on Sol. And the major name here is Hxro, the market leader in this sector, and one that's about to go through a Cambrian explosion this cycle, in my opinion. So let's look at this growing ecosystem, plus the amazing value accrual it's going to have from the dApps building on top of it. So Hxro Network, as the name would suggest, is a network, the liquidity layer on Solana that derivatives products are going to be built on top of. So here you can see Hxro derivatives, and on top of that we have the liquidity layer, risk and margin, plus all the settlement and exchange occurring via their novel products called Dexterity and Spandex. So that is what you can come and plug and play with. Hence, this is a composable network that dApps are building on top of. Why are these dApps, as you can see dotted around the chart here, why are they building on top of Hxro rather than doing it themselves? Well, this means they can tap into already established infrastructure. They don't have the cold start problem, which is essentially how do you get liquidity to your dApp from the get-go, starting from a point of zero. Plus, they also take advantage of Hxro Network's incentive structure for users as well. So essentially, this makes it very easy for builders to come and join Hxro Network, build their dApps on top of it, and get going straight out the gates. Focus on product, focus on marketing, those kind of things, and not having to worry about the back-end infra. It's already there. Personally, I like the term liquidity layer 2. If you think about Solana as the L1, and then on top of that, Hxro as an almost L2 of just liquidity, you can kind of build a picture of how this ecosystem actually builds itself out. So going from left to right here, you can see the upcoming dApps. These are about to launch sometime in the not too distant future and into 2024. We have the current derivatives products already live and kicking, Guacamole, Nolobot, Flowmatic, and others. And we also have iGaming, or gambling as you would like to call it, betting applications also being built on the Parimutuels product that Hxro has to offer. So simply to think about, each time a new dApp develops on top of Hxro Network, they're adding to the already existing liquidity, they're bringing more users to it, deepening said liquidity and causing more transaction fees. Every time there is a transaction fee on the network, Hxro takes a clip of that, and 50% of those fees go directly to the Hxro Network stakers. So if you've got the Hxro token and you're staking it, you're getting a juicy reward like a toll booth each and every time one of these dApps has any transaction taking place on top of it. So as the number of dApps increases over time, the number of transactions will also increase. That toll booth analogy really is going to go burr. So as things currently stand, we have a few dApps live and kicking. We're starting to see a bit of traction on the network, but nothing major as yet. But as more and more do come online, the flywheel really will kick up a notch, and I think we'll start to see some big numbers being processed by this network overall. And as Kate points out here from the Hxro team, it's a full value accrual ecosystem. So what does this mean? This means that the revenues, the value created by the ecosystem goes directly back into it. So this is the real flywheel effect of things here. So let's take a look at this, how the fees are distributed. So 50% of all network protocol revenue is captured by Hxro stakers. Most of this is in the settlement token, which is USDC. There's also a bonk and bust application out there, settles in bonk, and thus you'll be paid out in bonk as well. But most fees are coming in USDC. So 50% of all network revenue goes to the Hxro stakers directly. Another 25% goes to liquidity providers on the Hxro to USDC pair over on Radium, so incentivizing more liquidity to be added to the network over time. And the remaining 25% split between treasury, market making, protocol owned liquidity, insurance, and incentives/rewards. So what we can see from this programmed into the network is the fact that as it starts to gain more traction, there's going to be more fee share, higher rewards for stakers, likely drives up the APR for those stakers, and thus would drive up the price of the Hxro token as well. I mean, if you're dishing out, say, 50% APR in stablecoins, the price of that token that needs to be staked would obviously go up. So if you just check this one out on CoinGecko right now and go to the markets down here, the top one is to be avoided as that is on ETH. You're going to pay all the ETH fees, but they have cleverly positioned themselves with some liquidity on Ethereum mainnet. If Ethereum maxis want to buy the token, therefore they can. But if you come down to this pool here on Jupiter, you can buy this directly on the Solana network, hence very low fees. And obviously it will then be in your Solana based wallet and you'll then be able to stake it to get involved with this passive income play. So at that point, you would swap some of your tokens into Hxro here. You'd get the best price using Jupiter as well, because this is an aggregator finding you the most bang for your buck. You'd then find your way over to the Hxro application itself, app.hxro.finance. And this is the staking tab here. So if you click on stake, you need to stake this token to get that passive income, to get that yield that is going to be definitely flowing in during the year 2024 and beyond as we hit the new bull market and all these protocols really start to take off and launch. And the duration for staking is a minimum of 7 days. That will get you a 1x multiplier in terms of your stake weight. But if you increase your stake weight to the maximum 3 years, you get a multiplier on your stake weight up to 4x. More on that in just a second. Make sure you understand the implications of this and the fact you can't unstake early from this position. But if you're happy with that, you would then click stake and confirm it in your Sol-based wallet. But to dive a little bit deeper into those staking rewards, why would individuals want to actually stake the token? Well, as we've already seen, 50% of network fees are shared with Hxro stakers from any Hxro powered dApp. We saw the dApps earlier, plenty of them coming online, some of which aren't even announced yet and will be coming online probably in 2024 and even beyond that as well. This network, of course, if it's around for like 10 years, you can imagine we're going to go from a few dApps into dozens, into potentially hundreds as time progresses. As we saw, the majority of the yield will be paid out in USDC. You're going to be receiving these different types of rewards, dollars, Hxro as ES Hxro, and bonk. Bonk, of course, doing very well for itself right now. So getting some bonk rewards. They're also likely to be going up in value as time progresses if this market continues in the same vein. But this network encourages people to max lock and max stake their tokens as they get in this escrowed Hxro. So it's Hxro that is escrowed. It vests over time if you wish for it to unvest. You have two options. So as you accumulate these rewards, one, you can lock them and stake them to the network, thus boosting your stake weight and your governance rights. And of course, course, that passive income. But you can also decide to unstake or vest out the ES Hxro and claim it as Hxro. But this unlocks over 365 days. So you would get one 365th each and every day until the full amount vests out to you. But I think for a lot of participants, you would just choose to restake it and thus increase your revenue from the likes of Bonk and USDC mainly. But if we continue down here, those of us wishing to get that passive yield mainly in dollars, if you do stake for just the minimum 7 days, you're not going to get those dollars until day 365. So you'd have to wait a year for them to actually come to you. That's not much of a passive income stream. But if you do max lock for 3 years, all of your rewards become claimable on the day they received, i.e. daily payouts. And that would be therefore passive income that you could therefore count on. So this is why I have max staked a bag of Hxro for 3 years to enjoy this passive income as this network continues to develop, taking a longer term time horizon approach here, seeing what they've got coming out, the number of dApps, etc., and making a play that this will start to pay dividends in the year ahead. Then if we take a look at some of the discounts available for staking Hxro, you can see this on the left-hand side. So say you stake 50,000 tokens. On the parimutuel side of things, so that is the betting applications, you get a discount of 10%. So from a 5% baseline fee, that would be 4.5% on a 50,000 stake. So you stake 1 million tokens, a 50% discount is achieved. And then for dexterity, so that is the perps, the derivatives, all that good stuff. Most of the dApps that we're more likely to be using in the near term, you can see 10% discount all the way up to an 80% discount here. Now think of this in terms of protocols. So many of the protocols that are actually building on Hxro have it mandated that they will start to, at least with some proportion of their revenues, purchase Hxro from the open market and max stake it. So you can understand why they can do this from this chart here. If they accumulate a large number of Hxro, not only are they going to get all the rewards we've just talked about, USDC, Bonk, ES Hxro, but they're going to get this discount that they can use to either increase their profit line or potentially pass on the discounts to their end users. So you can see there's definitely a positive feedback loop from the ecosystem participants, not just the individual investors, but also the protocols to be accumulating and max locking the Hxro token. So this could see a lot of accumulation taking place over the course of this bull market. And so if this does play out, this would of course mean price would have to go up if you get all these people just buying up loads of tokens. So in my mind, at more depressed prices that we're at right now, you can own a larger percentage of this overall network, a larger income stream, that passive income stream into the future. And if this thesis is correct, therefore get a bigger slice of the pie as time progresses. Now, if you use any of the Hxro related products, you will be getting Hxro incentives in the form of that ES Hxro. And so essentially you get paid for participation in this network. So the more volume you do on their products, the more tokens you can get, and therefore you could stake them. But on top of this as well, if other dApps build on top of Hxro and also want to incentivize you, you get this kind of incentives squared mechanism. And we're going to see this play out with PepperDex. So that is a new DEX that is coming out potentially by the end of this year. They're going to pay you in OPEP, an options token that you can therefore receive as an incentive for trading on that platform. So you would not only be receiving their incentive, but ES Hxro as well, as it will be running on Hxro Network. As we saw, that is the liquidity layer everything is built on top of. So on to the prediction model that Grant from Blockmates actually put together on Hxro here. So essentially this starts off with a baseline. So say you purchase $10,000 worth of tokens at a price point of 18 cents. We're just below that right about now. You'd receive roughly 55,555 Hxro tokens. Now, if the platform and all of the different dApps running on top of Hxro put through a total daily volume of around $500 million notional through Hxro Network, the average daily fees would be $125,000. Now, this may not be something that can be immediately achieved, but in the medium term, definitely something we could see with many other derivatives platforms doing these types of numbers already. Well, if 85% of all tokens were to be staked, which is also higher than what is currently staked, if you were to stake for just 7 days, your stake rate would be 0.015% and your rewards per day around $18, annualized 6,750 or an APR of 67%. If you went for the full 3-year lock with these figures, your stake weight at 0.059%, $74 per day in rewards, 27k annualized, and 270% over the course of a full year. So this may seem like pie in the sky math at this point, but what we know is that liquidity begets more liquidity, and as these flywheels kick off and as crypto grows in these parabolic movements, these numbers aren't fairy tales. So what Grant's gone on to further model here is that if we have this 500 mil ADV, we can work backwards to try and get a percentage of around 20% APR. This is something that seems reasonable within crypto, but if we are to pull out 20% APR and work backwards, well, this would price the Hxro token at $2.45. So the initial 10k would become around 137k and generating around 27k per year in staking yields. So that to me seems like a decent passive income opportunity that I don't want to forego. Hence, this is a thesis, and this is the reason why I am max staking a bag of Hxro Network. So I think the TLDR on this one is Solana likely to continue booming. Derivatives market also going to continue to boom. The liquidity layer on Solana that I believe will be most used will be Hxro. And we've seen how these numbers could potentially model out. We've got a lot of protocols going to launch very soon on top of Hxro Network and really kick off the flywheel. We can see the value accrual is there. We're just waiting for the numbers to be reflected. And we haven't even touched on the betting markets as of yet. So we will do so in a later video, but I hope this one has been enough to wet your whistle for now. And I will see you guys in my next one. Subscribe if you're new. Peace.